Okay, hello everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, October 8th, and I'm Michael Boutros. And good to be with everyone here in the room. Sorry I didn't have the question box open. Good morning to everyone here. I see all your good mornings. Great to see you guys. Eileen, Merdad, great to see you guys. So a quick jump into the price action. We just got the release of weekly jobless claims here in the United States, 263 versus the 274,000 expected. Continuing claims right basically in line with expectations. So you can see a quick relative performance here of the greenback so far. Split decision on the day. You got the Swissy, Euro, and Yen with a little bit of a marginal gain here, but larger pullbacks in some of the trades that we've been watching, guys. The British pound down 0.29, Aussie after coming to that resistance down 0.39. Kiwi, I think there might be a little bit more there, down 0.18. So we'll definitely take a look at those. CAD with a little bit of a rebound on dollar CAD, pushing the CAD down by just a fractional of a percentage point there, but maybe a little bit more to go on dollar CAD before we start to look at the short side again. So we do have quite a few pairs to get through today. As always, questions, trade setups you'd like to review, feel free. Mark, I see your question there on sterling yen. Let me jot that down. I actually did not take a look at that this morning. Let me just jump right into that real quick and see what that's doing. Right, so it's almost the same picture that we're seeing on some of the other sterling crosses. On the sterling yen specifically, if you guys recall, this was the on the radar charts a few days ago. You know, we looked for an opening range break of the week. It gave us a pop just shy of the 84.08 level, right into the 84 handle. We tagged that 84.08 level finally last night. Here's the break of confluence support. So former resistance, now support, basic trend line off the low. At this point, you'd want to tack on just a quick retracement mark to kind of gauge what your downside targets might be on this one. And if we do that right, that's the opening range low. The 618 comes in right at key support. So the possibility for a spillover here in thanks for bringing this up, by the way, Mark. Looks very interesting here. On the sterling yen is definitely there. I'll bring your attention to a few things that we've been following on sterling yen. And basically, this pitchfork formation or median line formation off the lows that we made back in late September, early October on the open, you can see the median line caught that high that we looked at yesterday in the webinar, almost to the pip before the pullback. Here's that final stretch into the 84.08 level. At this point, momentum did see some divergence into that high. Didn't necessarily get a conviction trigger break, but I would be looking for this heading into U.S. trademark. Look to see if momentum breaks below 40. We haven't gotten that break yet this week. On the back of this type of turnover, you'd expect to see a little bit more of a spill to the downside. Also, if we look at this on the daily chart, we've now taken out yesterday's highs. So if we break below yesterday's lows, it would be a nice 5-day stretch into a high and an outside reversal. Would sort of give us a little bit more of a downside bias on this. But near term, sub 183.50, I'd say this thing's at risk. And be looking for targets down into basically the 82 handle. You have the median line support, a 618 retracement of the stretch, and the objective weekly opening range low. All pan out in this region here, just below 82. Okay, the only thing I'm not comfortable with is the turnover in momentum. If we can see that give us a little bit more conviction, Mark, I think it would be a nice play. Sterling yen on the 5-minute. Yeah, so even on the 5-minute, we held 40 all night long, all through Europe, but also into the tail end of Asia Pac. This is the first 40 break you're seeing. If we hold as resistance here, look for the opening range break for the United States to give us a little bit more of a tell. Do like it though. And it coincides with what we've been looking at with regards to the sterling crosses in general. Mark saying, actually, still not sure it's bearish now. Well, it would be a bearish scalp. Again, guys, everything we talk about in this webinar specifically is going to be more near term. So I think near term, you could see this spill a little bit lower. I wouldn't be looking to sell at the lows by any means. But if you get back into this resistance region, you get a trigger, it might be a downside play. The broader, formation is still constructive. You're right, Mark. We would need a break sub 82. This is the bullish invalidation level. to get this to turn over. But at this point, we tagged median line off the lows. You could see a little bit more of a spill to the downside. The target that we talked about, excuse me, earlier in the week, just trying to find it here. Earlier in the week did highlight that look that we were looking for into 84.50. So that was sort of the target that we were looking at with the break above the 83.50 region. Now that we're back below it is why I think it's a little bit at risk. Look for this. This is near-term bearish invalidation. If we get back above 83.50, we'll favor that long side again. Nice pair, making a nice break here, Mark. Thanks for bringing that up. All right. He says 85.36 is what I was looking for, but I don't. But yeah. So the 84.45, 84.50 region, you're probably looking at that swing high from September. There's a whole region here I'd be looking for, and that's why we love these confluences. Typically, are my favorite plays, Mark. You've probably heard me say this a million times. So you have 100% extension off the low. You have a 50% retracement off the high. That region coincides very closely with that swing high in late September. Let's just call it 84.40, 84.50. But the entire region's pretty dead on with that median line off the lows over the next few days. We're basically into the open of Asia Pac tonight. He says, okay, thanks, and more than welcome. Always willing to look at a fresh trade, but looks good. So let's jump into yesterday's report. We'll go over the radar charts first. I actually really like the price action we've been seeing in some of the Euro crosses. Again, we went over the CAD being a little bit weaker off today. And then we'll get into the scalp setup, which was highlighting, again, the Aussie dollar, which continues to be a nice play here. But first things first. Euro CAD was up on tap last night. Here's what it looks like today. All right. So the basic premise here was that we rebounded off of wrong chart. Was the fact that we rebounded off of that 618 extension off the highs. So remember yesterday we talked in the webinar, we had come off the median line off the highs. It gave us a rally right back into the initial opening range low that was 47.35, and we were sort of looking for an opening range break here yesterday in New York. You didn't really get one that was operative in my opinion. The break spilled right back into 146.50, and then we went right back into resistance and we held that zone. The Asia Pac opening range broke to the downside later, went for a perfect tag of 145.63, and then you saw us pop right back above. Momentum gave us divergence into that lows, into a trigger break. 9 times out of 10, that will be a beautiful scalp. And this was your upside bias here to really flip the bias. So the targeted resistance in the near-term bearish invalidation level that I quoted you last night was 47.35, which was dead on with the upper median line parallel. We probed right through it and came right back off. Momentum really unable to hold any ground above 60. So near term, I'm kind of tailing off on the Euro CAD. The play was a rally into 47.35. That's now that we've failed to really break above it. I'd need some conviction here to get back on the long side for Euro CAD. Relatively speaking, looking at the performance today, Euro with a slight advance, CAD with a slight disadvantage. You're seeing that reflected in price action, but again, they're the tightest, one of the tightest two performers on the day. So I think we need a little bit more conviction before we start to jump on board here again. The risk is for a move lower. You know, we've been holding within the confines of this formation very neatly, and the risk is for a move lower. The only thing is I like the long side after a 618 extension like this to give us a little bit more of a topside bounce, but here we are, unable to breach resistance. So we'll keep this on the radar. I don't really think there's an operative move for us here today, just based on the price action we've seen so far. Larger range ATR as well, so keep in mind it's a little bit bigger of a chunk, 43, 45 pips per scalp should suffice. I don't really have necessarily a setup or a trigger from here. The only tell here, I think, in my opinion, would be a clear break back below 46.60. So if we break those lows, let's go ahead and adjust this. If we break these lows here, it would constitute a basic break of the Asia pack opening range. Here's your Sydney opening range low, your Tokyo opening range low, and now it's the US opening range low. A break below that, you'd shift the bias back into that 618 and essentially right back into the median line off the highs. So you'd be looking much lower from there. Here's what EuroCAD looks like on the daily, by the way. Okay, pretty big region of support that we came off of. There's that 618 that we highlighted on the scalp chart. Add to that 45.90 is a basic 38.2 off the low. And it's interesting because if you look at EuroCAD, where we reversed, it was right at a very nice confluence region of support. If you look at dollar CAD, it turned right ahead of the region we were looking for. So here's a quick look at dollar CAD. I'm going to jump back into EuroCAD, but real quick, if we take a look at dollar CAD, the region that we talked about yesterday was right into that 29.50 region, 29.60. The low was 29.70. Okay, one feature I found yesterday, and I didn't have the chart snapped, so I didn't have this trend line coming in during the webinar. But if you scroll back and make sure all our trend lines are snapped in place, you can see a long dated median line resistance. It caught the exact low that we made here in July, and that's the upper range of that support zone that we rebounded off yesterday. So it leaves me a little skeptical with this not really rebounding just ahead of the support region we're looking for. But to put things in perspective, to go back to the EuroCAD, it came into a much more convincing region of support. Okay, not only is it the Fibonacci confluence, but it's also the stretch lows from September and the initial opening range high for August. So with this in view, looking at the scalp chart, or looking at the 30-minute rather, you can envision a scenario where you get a little bit more of a topside pop, maybe go for a tag of the median line parallel here, and then we try to break the lows. So I'm a little bit indifferent, or I'm a little bit neutral here. Let's look for a break of the US opening range. I would be much more comfortable trying to play the short side if we do break the opening range low. At its face value, we're just simply in the initial opening range for the week. Here's your Monday, Tuesday stretch. So treat it as such. Okay, we'll put this on the bench for now, but look for that break 46.65, 46.60, which shift the focus back to the downside. If we clear 47.35, you're pretty close up on 47.80, which will complete a basic 38.2. But more importantly, and why I love that region, is it would be just a basic weekly opening range high. So remember, we try to move any, in these levels that we provide, we try to remove any subjective behavior. Everything is super, we try to keep it as objective as possible. Any questions here on EuroCAD? All right. Next up on tap was Euro Aussie. Let's go back to that. Euro Aussie with another decent way to be able to play the Euro strength and the Aussie pullback that we were expecting. So actually, guys, I'm going to segue real quick. Before we jump into Euro Aussie, to make more sense, I'm going to jump into the intraday update from last night. And the first scalp chart was Aussie Dollar. That was the first setup that we were looking for. Listen, this thing made a pretty convincing break of confluence support. The more convincing thing was that we came back and tested it as resistance. And that held. Okay, so that shifted the focus to the downside. I was telling you guys in the report, look for a break below 40. We haven't cleared that all week long. Here's what Aussie Dollar looked like, or looks like now. Okay, the 40 level held. This was a fake out last night. The 40 level held, and then you saw it pop back above that 71.80 level. By the way, 71.80 actually represents the September high day close, which is why it was the near-term resistance target we were looking at yesterday. And here we are. It was the downside support that we were looking at when we wrote that report yesterday. We were testing right there at that 71.80 level. The operative slope is still bullish, and that's why we wanted to really highlight the fact that 71.50 would be the bullish invalidation level, whether it's broken within the confines of this formation or whether it breaks that formation and tags it again. Remember, we went over this yesterday. There's two median lines in play here, and the market has been respecting both slopes pretty nicely. You can see the median line, the lower median line did see a couple of quick spike breaks, but caught the highs. Really nice pivot, break, instant support, break, instant resistance. Within the confines of that gray one, you have this tighter knit, steeper ascending slope. The market doesn't tend to hold these steeper slopes for too long. This one's been in play for almost 2 weeks. So I like to use the deader slopes where possible. So that still highlights, especially going into the close of U.S. trade today, still highlights 71.50 as the level you'd want to invalidate the long side of the trade. All right, so the momentum hold at 40 into a trigger break, shifted the bias to the upside. You're looking for 72, 72.05. The market remains at risk below this level. Here's what it looks like in the 5-minute. So you can see the same expression in momentum here, right? On the momentum on the 5-minute chart, you're seeing a little bit more. Hold at 60, hold at 60, hold at 40. That's when the market starts to go sideways. That's exactly what we're seeing in near-term price action. So you're looking for either a rally and a short trigger into 72 as we open up US trade, or you're looking for a pullback and a long trigger into 71.50. Remember, the longer day, the daily chart for the Aussie is pretty interesting here because we came into that key resistance region and it held. Let me zoom this out real quick. So we came into this key resistance region that we highlighted on Tuesday's report, and we held. We didn't really, I mean, guys, we closed at 72.06, the level's at 72.03. But point being, a failure to push through and hold above this region leaves us at risk for a little bit of a pullback, okay? So we'll look to see if that holds into U.S. trade. One other feature, and I don't want to get too granular, guys, with this, just to point it out. One other feature is that 2001 trend line that we talked about, right? And the 2000s caught the 2009 low. We rebounded off it earlier this year, but then we broke it, right? Saw a quick rebound on that spill. We broke it back in September and failed. Right now, that's also support, and that comes in, lo and behold, at 71.50. Okay, so there's a lot lining up there. We actually tagged it as support yesterday on the rebound before we pushed higher. That's the level I'd be looking to invalidate the immediate long side bias for the Aussie. Guys, does that make sense? Okay, so let me know if you have any questions on Aussie dollar. Basically, the upside bias remains in play above 71.50. Near term, your long bias is at risk below 72. So if you take a long scalp on this as you head into 72, you want to reduce your leverage, take some off the plate, stops at break even. If you get the breakout, great. 72.40 would be your next objective topside target. If we get a drop into 71.50 and we break, you'd look for a spill all the way back into the lower median line parallel. Yesterday, we noted that at 70.50. Now that price action is moving more over in time here, we're going to sneak that up into right around 70.80. Keep in mind, as far as the Aussie dollar is concerned, you do have Fed minutes coming out later today at 2 p.m. I mean, your guess is as good as mine, guys, with this nonsense at this point. You know, Yellen has already come out and given us a whole interview with her stance on monetary policy. She really softened the hawkish approach with some more dovish statements. I really don't know what the minutes are going to reflect, because that's even prior to that press conference, prior to that speech. So we'll just have to be very nimble on the dollar crosses as you head into that 2 p.m. hour. You're likely to see things start to quiet down a little bit as that release comes out, or right ahead of the release, I should say. So keep that in mind. But these event risks can oftentimes be a really good opportunity, because they'll cause the spike that we're looking for. Meaning, let's say they come out, dollar surges into strength, you see a spike right into the 71.50 level. Well, that confluence region comes in right around 2 o'clock, right? So if we rebound off this level, it would be a really nice entry for the long side. If we don't, it's going to validate the broader breakdown near term here for the Aussie. All right, but I'd be interested in playing it that way if we do see a sudden surge in dollar strength. All right, so that is Aussie dollar. The other one on yesterday's report after Aussie dollar was the sterling, and I know there's a lot of interest on that. Bernard saying sterling is coming down. What is the next long entry point? 52.40 possible. I like 52.40, 100%. Bernard, you're looking at the right region. I have 52.37 on my chart from last night. So here was the upward slope that we were working with the pound. Interestingly enough, the pound came into that major key resistance level, 53.40, 53.30, whatever you want to call it. It was a really nice area of resistance. We talked about that here in the webinar yesterday, with the rally coming into a major area of risk here. 53.40 is the September open. Okay, and the brown trend line you see there, or the purple, dark purple trend line, this is a formation that dates back to the 2013. And we saw how many pivots we made off this. That was also in this region. Former lower median line parallel. Yeah, we broke it, but you've also seen some really clean pivots on that slope. So that was in that region as well. If you bring it into a close, guys, it's a perfect rebound. Perfect rebound. And again, just a quick trick, sometimes we'll want to look at the line chart, because this is just going to show you the closing price for each day. That's what traders want to focus on, and that's an exact rebound off that resistance. So we were right on course with that yesterday. That worked out pretty well on the downside slope for the sterling. I do think, I agree with you, Bernard, as we get deeper into the move here, we will be looking back for the long side, but certainly near term, the long side is definitely at risk here below 53.40. Back on the scalp chart, you can see, I was just talking with Jamie about this right now. We were looking to see if this holds right here. The median line off the low from last week broke, really leaves this thing at risk for a steeper drop into 52.36, 52.40. Remember, 52.40 is the objective weekly opening range high. Here's your Monday, Tuesday highs. You break it, looking for that late week low, or late week high, excuse me. So that's going to also confluence with the median line parallel and that 236 retracement. Beautiful setup. So you had some really strong divergence into the highs, price action making a higher high, the oscillator making a lower high. Not much of a conviction trigger break. I had it on here, but I deleted it. It was too, I don't really like working with these super steep ones, but heading into event risk, it is just something to look at. So you're checking a soft support target here at 52.80. Really wouldn't stress it too much. Again, if we get down into this region, we'll be looking for possible long triggers to try to press this higher. The immediate focus is a rejection here, looking lower. Medium term, you're still within the confines of this formation. Look to buy bounces. Mark says, are we getting a long trigger on sterling yen now? Yeah, I wouldn't be working with that kind of trigger. Listen, it could pan out. Don't get me wrong, Mark. And this is one thing I just want to note to you guys here in the room. We offer you these levels and these charts and way more than we will issue as far as a trade-by-trade guidance. So by all means, guys, if the levels are playing out and you have conviction on the move, we don't want to hold you back. That being said, the only reason I don't like the sterling yen is just because I don't have us at a major level here I would be interested in playing per se. If we get the trigger to the long side, let me do this. Let's look at a 1 minute. Okay, so in fact, on the 1 minute, you're getting some divergence into the lows. That looks good. But I still don't necessarily have a long trigger. High in price actually comes here. Stop against 83. Yeah, this could pan out. The only thing is you want to be really quick, right? So on this type of scalp, your first objective target would be 83.50, that major level that we talked about. I would look to play that bounce. I really wouldn't look to play continuation higher just because of what we're seeing in the pound recovery or the pound pullback. Does that make sense, Mark? He says, I understand. The level is not there. Yeah, if it was more of a concrete low, a concrete high, a major fib, something like that, I'd be a little bit more interested. But the real near-term price action is pretty clear. You have a topside trigger, you have a short trigger, you're at a soft support. So if you do take a short, the only problem is that your stop would need to be up at 80. Well, we haven't even opened the U.S. market yet, so I'd probably put it somewhere above 83, 83.40 or so. The Asia lows is probably where you'd want to trade it against. But yeah, could see a little bit of a recovery here. And again, looking at the British pound, same thing. Same thing. You could see this pop up into the U.S. trade session, maybe test the median line again as resistance, but objectively, I'd be looking to play the pullback again, right? We'd need to get back above this median line to get constructive on the immediate term for sterling. Hope that helps, Mark. Bernard, same thing. I hope that helps on the pound. Let me know if you have any questions on that. You nailed that level. Right around 52.40, 52.36 is something I definitely would be interested in. Mark says, yes, as always, smiley face, cheers. I appreciate that. All right, so that's sterling and Aussie from last night. Mr. Lavender says, back to Euro Oz. Yes, sir, back to Euro Oz. Here it comes. So Euro Oz. I didn't have this daily chart on there, and I don't really have too much conviction on it. Yesterday's radar chart on the Euro Oz right here was really just highlighting the expectation for the rebound here to press into that 57.40 region. More importantly, the upper median line parallel on the divergence we had into the lows. Really strong, right? And you had three divergent signals here. New low, new low, new low, higher low, higher low. So you're looking for that topside pop. As long as we hold within this confines, though, Mark, Lavender, there's two marks in here, so just trying to pin you guys down. As long as we stay within the confines of this formation, I don't really want to, we're just playing the recovery here. That's all we were doing. Here's what the chart looks like. Last month's open was 52.60. That's part, or 52.57. It's part of the reason we were looking for resistance up into that median line parallel. Here's what it looks like now. Same gig. So we're still holding the median line parallel, and momentum failed at 60. We'll have to see the U.S. opening range. Yeah, there's not much to work with here. Still looks like we can move lower. Still looks like we can move lower. I'm going to go over the other pairs at this point. We'll come back to this, Mark, if there's any price action that's compelling, but you're looking for basically a consolidation break of this real near-term range. Last but not least, dollar CAD, the daily chart. We just touched on it earlier in the session, but I just wanted to highlight again that key region of support, the invalidation level for the broader turnaround in sterling. Obviously, On a weekly basis, we made a massive outside reversal candle last week at the highs, testing a major resistance confluence. So the pullback is what's in play. We've just come shy of completing a 38.2 retracement. And like I said, I still feel like this thing could fake everyone out, try to run into that low, try to run to that support, then rip. But even if it does, we'd like to maintain that downside bias sub 31.80 essentially at this point. Here's what the intraday looks like for dollar CAD. It's been a chop session, really is not a good scalping environment for this pair at this point. I think on the larger scale for dollar CAD, you want to just reposition for the short once we get a decent pullback. Which is why I put the daily chart on there for the intraday guys. There's not really much that I would be looking to do on this really close term. First of all, it's got a tighter ATR, 25 pips, which is not a problem. I'll scalp 25 pips all day long, but the fact that we're seeing price action really start to hover just above this low, even if you get a break lower, that 29.48, 29.50 levels just below. It's pretty close. So I wouldn't really want to mess with this one just yet. I'd be way more interested trying to get into a short position if we can get a pop back into the median line here. That's just a basic 38.2, by the way, of the stretch, guys. So look for that as we head into the U.S. trade session. Remember also, for this pair specifically, over the next 48 hours, you do have some significant event risk, i.e. first thing is going to be the Fed minutes today at 2 o'clock. And then tomorrow morning is the Canadian labor market report, their version of our NFPs, and certainly the back-to-back combo there could give us some more definitive price action or could offer a decent rally to get back on the short side here. So all you need to view, in my opinion, is just keep your eyes on the broader term here. I wouldn't be looking to get too fancy on the intraday for dollar CAD. If we do play dollar CAD, I'd much more favor playing the CAD crosses. The Euro CAD setup. Here's what Euro CAD looks like. I don't think we talked about that yet. Did we? Yeah, we did go over Euro CAD. But you get the picture. Some CAD weakness for a little bit of a push higher here. The Euro has been a little bit stronger on the whole. Relative performance today still has Euro amongst the strongest, up 0.19% at this point. And respectively, CAD is pretty much flat. So I still think you're going to get a better bang for your buck. Excuse me, I'm all tongue twisted today, guys. Playing a CAD cross than dollar CAD specifically. Look back at the dollar index. We didn't go over that yesterday, and I kind of regretted it because I just wanted to show you the levels we highlighted on Sunday actually have all panned out, I think, into that 200 or the 100-day moving average, 11,967. And we're seeing a little bit of a rebound here. Near-term support at this point, we started off the month saying this was the bearish invalidation level. We'll drop that down significantly to last month's open. That comes in at 1228, and confluence is dead on with a median line parallel off the highs. Again, objectively speaking, momentum on dollar index hasn't broken 60 since April. Got a little probe below 40 here, but broadly speaking, momentum signature here looks pretty tired. Cyclically speaking, we'll also be looking for a little bit more of a weaker break if we are able to make it sub 1156. And that coincides heading to the end of the week here with a basic trendline support off the lows, specifically off the August lows. This is the broader picture looks like for the dollar. So you can see a little bit of an upswing that would give us a little bit more of a push lower on Aussie dollar, a little bit lower push lower on sterling. And then you'd expect to see that resistance hold in the dollar, resumption of the uptrends on the sterling and Aussie trades we've been looking at. Make sense? The puzzle piece and the story all works pretty well when we look at this index. So looking at the 30-minute of the same dollar index, looks like this. So that slope we drew last week, still in play by my estimates. The slope, sliding parallel for the same slope, caught the highs. the median line, we've been hovering around it, but even intraday price action, real nice pivot, support, support, break, a little bit of an overreach, resistance, break, support, and here we are again. Long story short, this, let me just zoom this out real quick. This 11,956 that we highlight on the daily chart is what the focus is. At this point, you want to bring down the bearish invalidation level somewhere to, oh yeah, we removed that already. No, we'll keep that up at 1128. As we noted on the daily chart, and there's really not any major support to 1156. The rebound here was right off the 100-day moving average, so keep that in mind. See that in blue here. All right, so a little bit of an upswing. Look for resistance in the dollar index to sell possibly later in the U.S. session to get back on the short side. Look for all the dollar pairs to have some interesting price action around the FOMC release minutes at 2 p.m. Bernard says, thank you, very helpful. I appreciate that, Bernard. Always great to see you in the room. Mark says, thanks, you're more than welcome. By the way, Bernard, I know that you're an active trader of the DAX. I did put out a piece on the ASX 200 yesterday. I don't know if you saw it on Daily FX. It's very interesting, okay, because we're coming into an area of resistance here as well. So if you're looking about equities, Bernard, if you're trading other than the DAX, if you're able to trade CFDs, this is one thing I would be looking at near term. If 52.47, 52.33 pops, I think you have an easy run to 53.60. That's the big test of resistance, okay? You got a median line of the highs here, a longer dated median line converges, and a 618 retracement of the August spill, all up in this region. So it might be a nice scalping opportunity there. Key support and bullish invalidation for the ASX 200 takes you back into basically 50.85. All right. Cameron says, oil please. Coming right up, sir. Here's what crude looks like. Okay, so in a region like this, I'm just going to put this out there because a lot of people were very surprised, I guess, when we saw 47.20 break that it rallied that hard, and everyone's calling this a top just because we're maxing, or everyone's looking at this to kind of peter out as we head into the August highs. Not us. I still think this has some legs behind it. The consolidation and the look, when markets compress like this, the breakouts typically give us some clear definitive bias. You don't want to start fading a breakout of consolidation that lasted an entire month. I'll bring your attention just to the most recent one in June. Okay, this thing compressed and compressed and compressed and compressed and finally broke. Obviously, that was the major spill of the year, but we've seen that happen in crude so many times. Here's another compression. This one lasted a whole month. A downside break led to a straight 6-day decline. That was a fresh yearly low. So, this is not the trade you want to fade, guys. And I get concerned when I see people saying, is it time to short? If you're looking to scalp it, yeah, we did have a soft target up here at 49.30. That was just simply the swing high, I think, that we made here. That was the August high. And yeah, we could get a little bit of a kickback here. The only thing that would put us back on the bearish camp would be a break back below 47.20. Okay, or if you get a run into 50.35, 50.13, then you possibly look for a little bit more of an assertive pushback. But even then, you just look for the median line, right? 50.34, 50.13 is a massive region of resistance, Cameron. I really can't stress that enough. My favorite setups, if you're not sick of hearing me say it, 618 extension off the low, 50% retracement off the high, dead on confluence with the 100-day moving average. There's a lot there. There's a lot there. So I think markets will tend to gravitate back up into that region. If we break it, keep in mind you're backed pretty closely by the 200-day moving average right into right into 51. Okay, but beyond that, beyond this little cluster of resistance, you'd look right into 53, and that's just a basic 618. So I'm liking price action. I don't have any ML formations that look convincing enough for me to work with. I was looking at this yesterday, and nothing's changed really. We'll just keep the broader focus in play here. Long story short, near term, Mike, you've explained a lot what's going on from here. Near term in the U.S. trade session, if we get a pullback into 47.20, testing that median line confluence, look for some support, possible long entries, topside stretch. I really wouldn't target anything on a near-term play above 50.34 until we see that break. Once we get that break, I'd look to buy pullbacks into 53. Cameron, does that help? Let me know if you have any questions here on crude. He says, yes, sir. Appreciate that. Pretty clear play. Cameron says, very nice. Hey, I appreciate that. Hamid says, can you please talk a bit about commodity stocks and equity-related currencies? Hamid, do you have a specific question on that? I'll tell you something straight up. For me personally, I tend not to stress those. Obviously, near-term trading is not the only trade I engage in. I do have longer-term positions that I just leave on for a little bit of a larger play. Sometimes they're Jamie's swing trades. Sometimes they're just longer-term trades. But I tend not to stress those on an intraday basis because they diverge all the time. And they're not going to work in lockstep on a day-to-day scalp basis, right? We could see crude rally as much as we have here. It just so happens that correlated pretty well with a CAD rally, dollar CAD pulling back, right? You'll tend to see commodity currencies, or what we like to call commodity currencies, the Aussie, the Kiwi, the CAD. Aussie's a pretty big producer of gold, copper, more industrial type of commodities, as well as precious metals. You'll see that Kiwi will tend to, New Zealand exports a large amount of dairy products, one of their largest exports. Canada, big exporter of crude. So as such, Hamid, we call these commodity currencies because they will tend to move or they will tend to be impacted by larger shifts or larger swings in those respective commodities. So a lot of time when you see crude rally, the automatic assumption or assertion is that the CAD should do a bit better. Now, my only problem with that on an intraday basis is because people start to go blindly with that directional bias just based on the fact that CAD's rallying or just based on the fact that crude's rallying. On a longer term play, Hamid, it's extremely important to keep those correlations in view. On an intraday basis, I don't stress them too much. The technicals are what are going to guide me. That being said, Hamid, it's also important to note when those correlations are important. We are starting to tighten up again. In 2007, 2008, even into 2009, when the crisis was going on, those correlations were lockstep, literally. Markets up, dollar down. Markets down, dollar up. Same thing with the gold inverse relationship. It was like lockstep. So we need to be mindful of when those correlations are strong and when they're not so strong. Does that answer your question? If you have a specific question on the relationship, do let me know. Again, I'm not someone who's going to be too stressful on that type of analysis. The more importantly for me are actually the seasonality charts that we post. I think this is much more of a tell. So if you go on the long-term page, guys, I'm sure you're aware of this, but the seasonality charts for me are more of a tell than necessarily the correlation. And these are just giving you gauges of in time what we expect to see. And the sterling, for example, we talked about this moving forward, heading into the end of October, November, you expect to see some further sterling weakness. That thing's at resistance today. or yesterday rather. We talked about that resistance in sterling yesterday. So we'll see if that resistance level holds near term. That pullback is what we're focused on, and see if we get a support hold at that median line. Eileen says, is there a place to regularly look up correlations? And really helpful with Jamie's seasonality research on the SB site. Yeah, the seasonality charts have been there. They were kind of hidden, Eileen, for the first couple of months before we moved them out into the open a little bit. We've been updating them, but I'm glad that you're able to find that very helpful. Again, a guide, right? Not necessarily going to validate a trade for us to take, but a guide, a general guide for what we should be expecting if history repeats itself. As far as regularly looking up correlations, I mean, you're talking to me. I have a Bloomberg terminal. I can bring up any correlation you'd want to see. If you want some research on correlations, that's not really readily available, Eileen. I know that Daily FX puts out a research report. I think we do once a month, maybe once a week. So you could probably find that on Daily FX. But if there's a specific correlation you want to look up, Eileen, feel free to let me know. Guys, we could just do it right here. Also a place to see daily relation without having the Bloomberg terminal. Not really, Eileen. Those types of analysis are really reserved for more higher end platforms. Might be an business idea for someone out there to come up with a retail version. But the terminal is like $3,000, $2,000 a month. I don't think the retail trader is going to want to get through that. Says, guess we need you, but glad to have you. Well, I'm here for your disposal, Eileen. So, guys, if there are any other research or specific charts that you want to see as far as relationships, correlation, seasonality, we're here to serve. Feel free. All right. So, Aussie we covered, sterling we covered, euro Aussie we covered, euro CAD we covered, dollar CAD we covered. So we're clean across the board for stuff I wanted to review. I'll open it up to your questions now, guys. If there are any specific pairs, specific setups you want to look at, feel free to throw them on the message board. Again, crude is something you'll hear in the news a lot over the next few days. So keep those levels in view, man. I think it's going to be a really, really nice play. Either for that pullback to get you back on the long side, or if we break out, because everyone's expecting this thing to come off again, that's why I think we might, see some more upside here. Watch 50.34 as resistance. Cameron saying Sterling Oz, please. Coming right up, sir. Sterling Oz looks like this. On the daily, so we turned yesterday. I just took a glance at this. I'm not sure if I have a scalp chart that's set up for you. I don't, but we can take a look at the near-term targets in a moment. The one thing I was looking at this is this. This is the first 50 break that we saw in momentum to the downside from overbought conditions since way back here. Oddly enough, that was actually ended up being the high we made for almost for the entire year. We came back and tested it in December. Okay, from overbought conditions, there was your first 50 break. You saw a quick recovery and a little bit of a rebound, but then we moved right into the lows, and that high essentially was preserved into the end of the year. I'm not going to say that that's the case necessarily here, but certainly some strong divergence into the highs. Again, whenever you're looking at divergence, it's extremely important to note that the only thing that matters is the close. So in actuality, this was not the strongest divergence signal. You did see a slightly higher high. More importantly, didn't see that high reflected in momentum. So the pullback certainly coming off of a region that's very interesting. We broke below this major pivot. This gray line here represents the July-August high, September opening range low. This is a basic 236 off of the lows that encompasses the entire 2014 trading calendar month, year rather. So The fact that we broke below that keeps the focus to the downside near term while below that same region. We came right within striking distance. The low yesterday, 112.22. The 100% extension comes in at 1134. So just missed it on the downside. Remember, huge ATR on this. So if you're newer to the strategies, just be a little nimble on a trade like this. I'd want to steer you more towards an Aussie dollar or even some of the other crosses that we're looking at. The sterling cross is much more volatile. So on a daily basis, you're still looking for about 60, 63 pips per scalp. That being said, I still like the downside below this region. Below this region. Could see a little bit of a pop higher. Wouldn't be surprised to see 215, but below this, I'd be looking lower. A break below 211.34, I'd be looking into that 236, but just ahead. I don't want to ignore those lows from August, so I'm just going to highlight that here. So it's 208.70, 208.30 would be a nice region if we break those lows. And you see a little bit more room to the downside momentum before we start testing any major support. Does that help, Cameron, on Sterling Oz? Here's what the intraday chart looks like. It is holding broadly a nice formation, a median line formation off the September highs, but we've been failing ahead of the median line on every pullback here, so it leaves me a little bit more concerned. You'll hear Jamie talk about this a lot, guys, when we're talking about the upside stretch into the upper median line parallel. When you get the stretch and price failing ahead of it, that's telling you something. Now, if we put a sliding parallel here, we might actually catch that. Well, it's not the cleanest, but broadly speaking, it's been holding price. The bullish invalidation level for this kind of trade, let me just snap these trend lines, make sure everything's in place. Yeah, depending on where we are in time. Right now, heading into the U.S. session, this is going to be the bullish invalidation level. If we make it past the U.S. session into the end of the week, and price is still respecting resistance at 213.90, I'd reserve this as the bullish invalidation level. Downside targets, we already noted on the daily chart, but here's what the intraday chart looks like. Hope that helps. He says, yes, very helpful, sir. I appreciate that, Cameron. Eileen says, by the way, I'd love to sometimes see a snapshot of your physical setup, your monitors, what you usually have up on your screens to be able to watch the setups efficiently during the day. Maybe you and Jamie can post some pics of your office screens on the research tab. Sure. If you'd like. You have a picture of it, Eileen. I think there's a picture of that of us, isn't there? Oh, the webinar. So that's actually the setup I'm working on right now while I'm talking to you guys. If you're looking for the screenshot of the actual charts we're using, I could definitely send you that. But a 4-monitor output is not really necessary for every trader, guys. It depends on what kind of trading you're doing. I mean, Jamie just does fine with 2, but he uses the 4-monitor as well. Again, we're publishing research all day long, so it's kind of necessary for us, but even 2 screens should suffice. Hamid, I'll send the message. Eileen says, so a screen of 5 minutes, a screen of a 30-minute, etc. Oh, the breakdown, right. So the way I have it is I'll be looking at this naked. I don't like to fog up my 5-minute or 1-minute charts with any trend lines or too much noise. If I'm trading Euro Oz, I have my Euro Oz levels highlighted on the 30-minute, and then I have the 5-minute or the 1-minute with my trigger set and ready to go. That's the only pair. That's the only charts I'll look at for the pair. The daily charts, I already know what I'm looking at for the major levels on the daily, the major breakout regions. If we're in a trade, then I can switch it to the daily and see if we're approaching major levels. Otherwise, this is all you need. As far as monitoring them all, I'll typically just have something like this going on one of the screens, just watching the opening range and the ranges for each session. As those move, as the ones that I'm watching start to move, then we'll kind of just increase our focus into one specific region. Eileen, if we have too many, is that two instances of market scope open so you can layer those? Yes. Between this and this, yes. This is all one, and this is all one. But if we have too many things that we're focusing on, you're not going to be able to. Let me say this: we want to cherry pick. Is in the room. Who was that email I got from? Valencia, are you in the room? I got a question in the email yesterday asking how many trades should we be looking to take? And this goes pretty much in line with what you're looking to do, Eileen, kind of where to look. Where do I look to see what I should be getting into? On an intraday basis, I don't want to set expectations. I don't like that question when people ask how many trades should we be looking to take. If it's a good day, I can leave out of the office taking 15 scalps. If it's a bad day, I could leave taking 0. It all depends on what the market gives us and whether we're there to see the triggers and take the trade. It's completely variable on market conditions and completely variable on what trade you're looking at and where you are. Setting an expectation by saying I want to place 10 trades this day or I want to place 5 scalps this day is going to force you into trades that you might not necessarily have the conviction on just because you want to execute X amount of trades. It doesn't work that way. So I would say on average, I'd say 1 to 2 scalps a day, literally. On a good day, I've been in and out of position 6, 7, 10 times. If there is a 3-day stretch where price action is lackluster, it's sideways, I don't see any positions, then I don't take any. Okay, it should be seen as viewed as opportunities, not as scheduled X amount of trades per day. And everyone plays these levels differently, guys. Some guys will play this little rebound on a trigger. Some guys will be playing the larger pullback in general. The levels are there and so versatile that we have the flexibility of playing a short from here, playing a long from here. As long as you're nimble, you're maintaining and respecting your risk-to-reward ratio, and you're timing your entries correctly. In downtrends, we can play uptrend scalps. In uptrends, we can play downtrend scalps. We'll always favor scalping in the direction of the broader trend. But the opportunity is there if you're nimble enough. Great questions here today, guys. I hope that's helped. Feel free to let us know. Guys, IDO is up and running and ready to go as far as the beta trials version is concerned. So I do look forward to your feedback on that. Keep in mind the hours of operation for IDO search are 9:30 a.m. to 11:59 p.m. here in New York. That's just the nature of the software and how it's processing the data that's coming through. But I would be more than interested in your feedback on that. Do feel free to do it. Send it to either info@sbtradedesk.com or you can send it to myself or Jamie specifically if you'd like. That wraps it up for the webinars here this week. Guys, we'll be back on Daily FX for the public free webinar on Monday. Again, here on SB, Tuesday, Wednesday, and Thursday at 8:30 Eastern. Watch out for the 2 p.m. print with the Fed minutes. Again, I'm not personally expecting much, but you never know with these things. Someone can hang on one word one of the guys said, and you'll see the market start to rage. So the expectations have kind of been set. The lower NFP print certainly puts a lot of pressure that we won't see any rates this year, in my humble opinion, as I've been saying. But the fact that we got that NFP print really weak post the FOMC release, I don't think people will put too much emphasis on what's said. Unless there's a specific comment on employment, which has been the shining of the dual mandate, or the one that's been lustering more. I don't really think we'll see too much. If there is a comment that is a little bit more hawkish and the dollar rallies, remember, we've seen quite a dramatic pullback so far. or a decent pullback so far off the monthly high, I'd use that opportunity to possibly get into a fade position on some of the dollar crosses that we covered today. Best of luck trading, guys. I wish you all the best. I will see you next week. Have a great weekend. Cheers.